This morning, I said something was suspicious. Pay very close attention to the volatility index. We look at the heat map out here. We see we have a little bit of red out here with Nvidia and Amazon and Meta. However, when we look at the small caps, they were on fire once again, up 1.88% on the session. The fear and greed index moves up to 61. And are we going to see the fear and greed index actually move all the way into extreme greed territory? Today, Powell was speaking. He said the Fed won't wait until inflation is down 2% before cutting rates. And what this basically went on to say is Powell referenced the idea that central bank policy works with long and variable lags to explain why the Fed wouldn't wait for its target to be hit. But what Powell also said is they want to go ahead and have greater confidence that inflation is indeed going to go ahead and hit that 2% target. Small cap stocks get some revenge after big tech rally pauses. How long can they keep it up? And that's really going to be the theme of today, because when we look at this, is this nothing more than setting up a trap? We keep seeing each day, like on Friday, we went up. Oh, we did not close at the high. We've seen some selling coming in. Today, we were up substantially higher. Then we've seen a little bit of selling coming in. And if we actually look down here from the swing low up to the swing high, we can see the Russell 2000 is already up over 10%. Now you might say, Mike, is this only the Russell? Well, when we come over and look at the Dow, what do we have? A candle of indecision. Both on Friday and today, we have wicks on the top of the candles. And today we also have a wick on the bottom of the candle as well. Now with the Dow, the MACD indicator does look extremely strong. We have a good separation of the lines with about a 45-degree angle on the way up. So I wouldn't go ahead and say that the Dow is definitely over with. But when we come over and we look at the NASDAQ and S&P in a few moments, that could be a bit of a different story. We look at the Nvidia out here. What do we see? A down day Nvidia down 81 cents. And we're still looking for clues to see if indeed this is going to be a lower high in the market. We've already had the push down. We've come back up. If we can come back and overthrow this swing high there, then we'll see Nvidia come back, probably making a new all-time high. But if this fails, that's where we're going to see Nvidia come down towards this 100% level at about 113.21. Let's not forget, when we look to the left, we have several gaps that I can see that Nvidia has not come back and even attempted to fill at this point. We come over and look at Meta. Meta today was down as well, but I want to warn you guys something about Meta, which is different than what we talked about with the Dow and the Russell. Yes, we have wicks on top of the candles. However, if we look at the context, we can see Meta has been in a slight little corrective move on the way down. Now, anytime you see these type of candles, when the market's going down, we want to go ahead and proceed with caution. This could be a warning sign that the market is going to try to bounce from this area. Then when we look at the volume profile, this is also an area of high volume, which would make sense that we get a bit of a bounce. But I got to warn you guys, there are things shifting under the market that we need to pay very close attention to. We look at how the indices fared out here today. The Dow was up 210 points. The NASDAQ was up 74 points. The S&P 500 was up 15 points. The Russell 2000 says was up 4 points on the session. And we look at advancing issues versus declining. Now, we had way more issues advancing versus declining. We had 55.7 advancing issues versus 41.4 issues declining. When we look at the sectors across the board, utilities, really the big laggard out there, down 2.25, but we had energy and financials basically leading the way. And when we come over and we look at, say, XLF real quick, what do we see? XLF, a big, strong, bullish candle breaking out from this recent high. And we also have KRE, which we know is exposed to a lot of commercial real estate with the regional banks. What do we have? Big, strong push on the way up, but we did close with a little bit of a selling tail on top of this candle. We got to ask ourselves, is the market trying to set a trap to send prices substantially lower? Let's not forget that NASDAQ has peaked out more times in July than in any other month. So we got to ask ourselves, is this time going to be any different, or is it going to simply be the same? When we look at the Fed watch tool, we can see the market is aggressively pricing in rate cuts, which right now the market is loving it, especially the small caps out there. However, I still think we need to proceed with caution. Let's not forget, Goldman Sachs and BlackRock had earnings out today, and tomorrow we have Bank of America, Progressive, Morgan Stanley. So we're right in the midst of earnings season. When we look at the big expected movers out there, it really starts to come in on Wednesday, where we have United Airlines plus or minus 9%. ASML plus or minus 7%. And let's not forget, Netflix and Taiwan Semiconductors are going to come out on Thursday, and they have some pretty good expected moves as well. 9% and roughly 7.5% for Taiwan Semiconductor. So when we look at how Goldman Sachs fared, you guessed it, new all-time highs out here. When we look at BlackRock was actually down. It spiked up a little bit, but then was unable to hold those highs. And we can see on Friday, we basically had a shooting star type of candle. Today, we have quite a large wick on the top of the candle as well, which could be another sign of weakness. And we got to be well aware, is the market doing nothing more than setting a trap? Because when we come over and we look at the QQQs today, what do we form? Basically a candle of indecision. So now when we come over and look at the Qs, look at today's candle, basically a candle of indecision. We're holding up right here near this high volume area on the composite profile. If we start to flush, the next areas we're going to want to watch is about 485 and then down here towards about 480. That's going to be the next high volume areas in the composite profile up and around these areas. MACD indicator is basically flat once it's already at these elevated levels. And out here on the 1 hour chart, we're still flatline near the zero line as well. On the 30-minute chart, I want to make everybody aware, Apex 7A massive 80% sale off all their valuation accounts, passed in as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. On the 30-minute chart, notice what we did today. We came up towards the upper part of that minus development area. We shot right back down. We just barely missed hitting the minus development area that I warned you guys about earlier today. But with a little bit of good news, we were essentially able to go ahead and close the gap from today. And then the last 30-minute candle, we had a hammer candle. So the question is, are we going to continue to rally and try to make another new all-time high? Or is that all she wrote? And we're simply going to go ahead and trap any of the upper level longs, and they're going to continue to sell the markets lower. When we come over and we look at the NASDAQ on the 4 hour chart, this is the area I said, watch out for. We have the potential for an ABC pattern on the way down. Now we do need to adjust this pattern because we did make a little bit of a higher high today. So now that ABC pattern completion, if indeed we do break the swing point, would now come in about 20,148. Let's not forget we still have an untested point of control down here at 20,012 as well. Then as we dive down and we look at the 30-minute chart, what do we see? Well, here's a minus development area we marked off this morning. Unfortunately, we did not get into it. And if we actually draw crosshairs across, we got into the edge of the minus development area. We just didn't get deep and down to where I was looking for. So now we have 2 consecutive untested point of controls. We have the one from last Thursday, the one from Friday, and actually we're going to have 3, the one that's going to be left behind from today. Now, if we look up here at value area high, that comes in at 20,668.75. The point of control comes in at 20,625.25. And value area low will come in at 20,566.75. So how do I want to play this? Well, as long as we're within value, there's not a whole lot for me to do. But if we start breaking below value area low, I want to target this minus development area down here. And if we can flush to the other side of the minus development area, you guessed it, I want to go ahead and target the untested point of control down here at 20,429.50. Now, in the event we break value area low and we start coming up, I then want to target the point of control, value area high, then up here towards the candle bodies from today at somewhere in the ballpark of 20,733. Anything above that, I want to see, can we go ahead and run all the way to 20,882.00. Now, when we come over and look at the economic calendar for tomorrow, what is in store? Well, 8:30 a.m., we essentially have retail sales coming out. And then we have some FOMC members speaking throughout the day. So tomorrow is not going to be action-packed with a lot of economic news. But then as we jump to the S&P 500, another day where we have a selling tail on top of the candle, MACD indicator is still elevated. So we've seen the SPY today making another new all-time high. However, it was not able to close up here at these all-time high levels. It may have been, however, it's very close to a closing all-time high by a fraction of a margin, plus or minus either way. It's going to be very close. Then as we look at the 30-minute profile, look at the last 30-minute candle, a big hammer candle. They pushed the market lower only to bring it right back up. When we look at the minus development area we drew out this morning, we still never came all the way down into that level. We did pierce a little bit higher. Now this morning, if you guys were paying attention to the volume profile levels we gave out this morning, as soon as we started cracking below value area high, the first target would have been the point of control. Then I said we could target some of these other distribution areas on the profile. However, we never made it all the way down to value area low yet. So tomorrow is going to be very interesting. Will we go ahead and violate value area low from today, tomorrow, bringing us down to the minus development area and potentially lower? The MACD indicator on the 30-minute chart is bearish with about a 45-degree angle on the way down at this moment. Then as we look at the S&P futures, you can see right up here, making another new all-time high where we settle right near this high volume area on the profile. But keep in mind, I want to pay attention to some of these other high volume areas as well. The first one down here about around 56.67. The next one down here at 56.64. And we'll see if indeed we'll push down towards that level or not. Now, we still got the minus development area on the weekly. And you can see today we pierced below value area low from last week's volume profile. However, we were unable to stay below it. So if you took a trade based off the weekly setup, well, you know what? It happened to be a losing trade. The next attempt down though, however, I want to give it a second shot, see if we come down towards the minus development area, point of control, and then maybe even all the way down the value area low. Now this morning, I warned you guys about value area high from the overnight session. What I say, if we break above it, we're expecting higher prices right up here towards the candle bodies. We made it way above that, but look, you could have played the rotation on the way back down. And this afternoon, you could have actually got the complete volume profile rotation all the way from value area high down to value area low, which was good for right around 17 S&P points. Then as we come over and look at the daily profiles, what do we see? Value area high coming in at 56.98.00. The point of control will come in at about 56.89.50. Value area low will come in at 56.78.00. Now we're closing very close towards the point of control, but I'm still looking at this area down here as a potential magnet area. So any signs of weakness in the market, this is where I am going to want to target. We talked about that level in this morning's video. So essentially, if we start cracking value area low, I want to target this level. If we break value area high and we start coming down, I want to target the point of control, value area low, and then I want to push runners down towards that area. Now we do got to be mindful as well, because when we look at the S&P 500 on the daily chart, notice all this right here is nothing more than upper level consolidation. So is this going to be resolution to the upside, or are we finally going to get that downturn on the way back down? So watch out. We could see stocks making another leg up higher, especially as we're in the middle of earnings season. Now, if you guys want to see 3 ways I use moving averages in my trading, watch this video right here.